Yesterday, we had a few nice data points out in the States. I think relatively solid. We had initial jobless claims, came out dead in line. Revision to the prior month was also dead in line. You know, we've had the continuing claims, I think, which also running nicely below average. So I think all in all, data points were relatively solid. We had crude oil inventories, which rose last month by 2.57 million barrels, but it didn't put a dent in crude. Crude actually traded really well yesterday, along with the commodity space. So the day before, we saw commodities sell off. Yesterday, we saw commodities rally. And really a quite confusing action over the last couple of sessions. So Wednesday's session in the States, we saw a massive reversal. We opened at the highs, closed at the lows on about a 1.2% gap up. Then we closed down about 1.25%. I mean, that's typically just a really bearish signal. And it still could continue to play out that way, but you know, yesterday the market just seemed very relaxed about it. You know, we sold off a little bit early, just couldn't. There were no sellers to really follow through and push us lower. And the next thing you know, we're trading a little bit higher. We managed to close up about 0.5% on the day. So the markets were very sanguine about the previous day's action, which I find surprising. And moving on to the Asian session, we're down across the board, more or less about 0.75%. Australia taking the least amount of downside there, but Shanghai and a couple others under pressure. Hang Seng's actually up on the day. I don't know why it's showing negative there. Hang Seng's up 0.67% as we speak. So not a whole lot of leadership out of Asia, just kind of following along on a drift. And I think from now going forward, I mean, we talked about this a couple of days ago. Now going into the Fed meeting, I actually really expect volatility to die down a little bit. I just don't see I don't see that many people placing bets going forward before the Fed, and that's going to be big. You know, I think you know, rate hike chances have actually been drifting up over the past maybe 2 weeks. Still not even 50%, but getting up closer to the number, maybe around 35% on a rate hike at the moment. Right, with a lot of stocks going ex-div on Monday, so you can have a look at that list there. I'm not going to sit there and read them all out, but there's a lot. So keep an eye on a couple of those. It's going to be worthwhile, you know, on Monday maybe. Could be a couple of plays on the back of that. Going into the market data on the day today, nothing really big to look at. We've got CPI year on year. I had CPI year on year out of Germany dead in line, as well as harmonized CPI, same thing, dead in line. We've got PPI final demand in the States at 2:30, and then we've got University of Michigan sentiment numbers at 4. All right, let's get into some of the maps. As much as we've been kind of moving around, I don't know that there's that much to really show in terms of, you know, from a charting point of view on the day today. We'll try to go over a couple of what I think are the important ones. So one of the first things to look at, I think, and that was big yesterday, is MTN. And MTN, we came down and we basically traded at the exact same bottom that we did on the total puke day that we saw when the S&P was down 125 points pre-market. Same sort of thing, we traded down to the low 160s. This is a little bit of a different story. There's the Nigerian story where Nigeria is fallen out of the JP Morgan bond index, and therefore they've got to sell a bunch of those Nigerian bonds, and obviously going to put some pressure on the currency. I think this 2-day move on the back of that was hugely overdone, but big volume. I think on Wednesday, if I'm not mistaken, we did about 12 million shares. Yesterday we did about 15 million or 16 million on a big reversal day. You know, traded down to about 161, closed on the highs. That's a really good result. Not a key reversal, but a reversal, and I think I would expect that that's the bottom for the foreseeable future in MTN, unless there's some real panic globally. I would think that MTN's not put in a bottom. I'd like to see this thing trade up to the highs of the recent range, which is still about 15, 16 bucks higher than this. Next one we'll look at is FirstRand, which struggled a little bit yesterday after earnings. We traded down to 50 and a quarter early, bounced up to about 51.50. or 51.40, and then we reversed down to tried to ride around 50 toward the end of the session. Market bounced into the close, but this 50 level is obviously massive. It definitely looks a little bit head and shoulderish here. I think we showed this a day or two ago, but definitely looking a bit head and shoulderish. And if we drop 50 bucks, then I think this thing does have further downside to come. Earnings yesterday weren't great. It's it's quite a bit more expensive yesterday, or sorry, it's quite a bit more expensive than the rest of the sector. So, in order to justify these prices, they got to really keep the growth rate up, and I'm just not sure that it's high enough to really sustain it. So just keep an eye on this. If we drop 50, I think there's a lot of people along this one. Everybody's been playing up against this 50 level, and it could really rip lower if we do drop 50. Next one we'll look at is Kumba, which we've also shown over the last couple sessions, and the 92 Rand level. So I think that a couple different ways to look at this. I mean, if you really look at it, you can see that 92, which is right there, it's quite a massive level just in terms of horizontal resistance. But you can also see here that 92, sorry, 92 is big from a trend line point of view, and we really closed just above 92 yesterday. I don't know if it's enough to really call it a breakout this morning, but watch this one closely. It's just hanging around, consolidating in here. Mining stocks have definitely been trading considerably better of late. So, I've got a real inkling that this thing does, if it can pop above 92, maybe just need to get up to 95, 96, somewhere in there, and it can create a real short squeeze. There's still a big short interest out there, and there's no reason this thing can't really tack on some big numbers if it does kind of get above that 95, 96 level, just to start to force some of those shorts to cover. Last thing we'll look at here is Woolies, which pays a divvy on Monday, I think about 150, and this 100 level is massive. It's been real clean around 100. You can see all this time we spent above 100. It wasn't like going back and forth across the 100 level. So this is really a major line in the sand. We traded incredibly well yesterday. The best retailer, I think, by miles. Traded about almost 6 million shares to push up about 3% on the session. So it's very impressive action there. Be interesting to see what happens today. If we do trade up near 100, I kind of feel like we might need to. You're going to need to see some sort of something positive happening to really get us to push through 100 here. But 100 big level at the moment, and I think maybe a decent little resistance point to sell into as well if you're negative on some of these retailers. And that's it for today, guys. Good luck out there.